Okay, so first to talk about the introduction to green bonds issuance and reporting process. Now, we've already had a workshop, and I hope that many people on this call will have attended that workshop on green bonds in general. But we're going to talk a little bit more about how the green bonds issuance process works, and the processes for issuing. So first, talking about the advantages of green bonds, the idea is it's a fairly flexible instrument where it isn't for a specific deal. For example, one could imagine a deal with an IFI for specifically, let's say, energy efficiency in buildings or something like that. A green bonds issuance can be much broader. And so you can have a number of deals or a number of investments within the framework of the bond, which allow more flexibility for the green bond issuer. The other idea is it tends to be lower costs than just a typical bond. So the interest rate on the bond and potentially the tenor are more attractive to those issuers. So one can imagine a 1 or 2% rebate on the bond would add up to quite a bit of money over the course of 5 or 10 years. The other thing is, internationally, it is an increasingly attractive and popular investment. There are, I can't remember the amount, but it's billions every year and growing almost exponentially. And there are a lot of institutions that are quite interested in investing in green bonds. And the idea is that there's additionally, what it does is it increases the efficiency and transparency of the financial infrastructure, allowing for certification and audits by reputable institutions. This is all in line with the trends in the financial sector globally, and especially in Europe, and things like the ensuring alignment with the EU taxonomy and things like that. And in particular, it's I think probably on the call, mostly we have banking sector representatives, but also for utilities and other relatively large companies, it's becoming increasingly popular.
Seth?
Yes.
Seth, just a quick thing. So, I mean, you mentioned about the volumes of green bonds, the sustainable bonds. Now it is like a market that has like overcome $1 trillion. It's like it's doubling every year. So 5 years ago it was, or 4 years ago it was about 200 million, and now it's like about doubling in size. And I think the key reason for that is that the latest commitment following the Paris Agreement makes that all the companies, the institutional investors, needs to invest in green assets, and so the appetite for that is like hugely increased. They have all commitments, to become carbon neutral, by 2050. So that's a big factor that increase basically the appetite. And usually, if a green bond is nicely structured, there is an oversubscription of 2.4 times, from the demand side, which is quite a good news.
Yeah, exactly. So the market is already big and growing exponentially. There's, as you just indicated, there's huge investor interest. Additionally, generally, governmental policies on including in Armenia, on promoting green investments can help, and there is a lot of social and citizen and customer pressure for companies to invest in these kinds of things. So there's long story short, this is really an area of growth in the financial sector and also in the non-financial sector, where there are huge opportunities. In terms of the process, there are, as you can see on the screen, let's say 4 major steps. First is the pre-launch. That is the definition of the green bond, the green bond framework, figuring out which particular green bond standard that the investments will be a part of, the identification of potential investments that could be new investments, or it could be refinancing of existing investments, for example. Then one has to get a second party opinion to make sure that the green bond framework is aligned with the appropriate standard. We will have a session in 45 minutes. In fact, a representative from the market leader, second party opinions, to talk about that process. Then there's a launch and a roadshow of the green bond. The idea being that there is a lead manager and representatives of the financial institution which will place the bond on the market and then allow it for issuances. And then post-issuance, there is reporting. In most cases, this is required, and certainly it is best practice to keep a close tab on where the proceeds are being used and also what are the impacts. So there are a number of parties involved, including beyond just the original green bond framework. It needs to actually be, bond needs to be structured and put to market, including development of a prospectus, subscription agreement, fiscal agreement, signing and closing the memorandum, and then later, as I mentioned, the external reviews, and that happens both pre-issuance and also post-issuance. And we'll go in detail about allocation and impact reporting in a little bit. In terms of timeline, I think this is useful to understand. Basically, we're talking about anywhere between 9 and 10 months from, let's say, initial idea to issuance. This could be, in theory, sped up, especially if banks are, or if the issuers are quite dynamic and can make decisions and move forward quickly. There needs to be some sort of a process to make sure that the proceeds will be allocated correctly. There need to be some policies from the issuer side on environment and social safeguards and things like that. Then once the green bond framework is developed, which shows what are the actual investments which will be included, then it's possible to hire the second party opinion provider and then move forward. And then it can be pretty quick after that, moving towards, maybe 3 to 4 months in terms of actually getting to issuance, and then working on reporting afterwards of the use of proceeds. Just a little bit on estimated. So just in Armenia, what is the general, I guess, areas of investment? At the moment, the estimated costs of climate mitigation, according to various public sources, are renewable energy. We're talking about over 1 billion, and actually not just renewable energy, but also combined cycle turbine plants potentially, although that might be problematic in a green bond framework, just to mention. But energy efficiency in residential and public buildings, it adds up to, and then also waste management, transport, et cetera. It adds up to a potential investment of in the billions of US dollars. So there's quite a bit of, I think, scope in Armenia for investment. And then there's quite a bit of interested capital abroad if the green bonds can be structured correctly. There are a few green bond standards. We went through this in fair detail in the last workshop, but just to mention a few. The first is there's a climate bond standard that they have. It's for green bonds that are specifically geared towards climate change. Then there's also the ICMA green bond principles, which are a little bit wider reaching. They are, so it's not just about climate, but it's also about other environmental positive areas. And then currently in development, there is an EU green bond standard. It's not yet finalized, but it will be linked to the EU taxonomy. So it's wise potentially to structure one's investment portfolio around the EU taxonomy while keeping keeping connected to the other green bond standard, or keeping well aligned to the green bond standard. There are various components in terms of things that need to be thought about. The first is the project categories, and this is in the development of the green bonds framework. So they have different standards, will have different project categories and how they are described. Frankly speaking, they don't differ tremendously, but how they are described and their titles can differ a little bit. However, there are some important reporting requirements differences, in particular, whether or not an annual report needs to be submitted on not only use of proceeds, but on the actual impacts, for example, on energy saved, greenhouse gas emissions reduced, etc. And there are some slight difference in terms of external review requirements. We went over this in fair detail in the previous workshop. If you are interested, then please do get a hold of us, and we can share the presentation from the previous workshops as well. So that's just something on the process of issuance and how it goes from idea all the way through issuance, and then also some on reporting. I'm going to turn the floor over to Tamara, my colleague Tamara Trumbic, who will talk about use of proceeds, project evaluation and selection criteria. I hope I have not gone over my time, as we are trying to run a fairly tight ship this morning, because we have a few presentations to go through. So Tamara, I'll yield to you. I will continue to control the screen, but please.
Yeah, thank you, Seth, and hello, good morning, everyone. My name is Tamara Trumbic, and I work together with Seth and Miodrag for Equa Ltd. And I will continue with this presentation, talking a bit on the use of proceeds, project evaluation and selection, and management of proceeds. So please, next slide. So yeah, as Seth mentioned, there are three main green bond standards. At the moment, they have emerged as the leading ones, and it seems that for the purpose of this assignment, the green bond frameworks that were developed have opted for ICMA's green bond principles. The differences between these standards are not huge, but still, when it comes to different sectors, there are some minor differences. But as you can see, ICMA more or less it's very broad, and it covers, I mean, all the sectors. Whereas, for example, let's say EU taxonomy, EU green bond standard, is not yet very advanced in some areas, or CBI does not have much on the, let's say, pollution prevention and control or eco-efficient products, but all of these standards are continuously being updated, and it's important for whatever standard the bank decides to go to look at the most recent versions, because they're still being shaped. Yeah, next slide. When it comes to ICMA, it's ICMA's green bond principles, which were selected for this, this time. There are like many categories, or we can call them sectors, that are then split into different project categories, and then go even further into detailing which type of the project and under which criteria can be labeled as green. And every issuer is encouraged to look at this list of sectors or project categories and really think in what would be their focus area, or in which project area they expect demand. So this list is mostly narrowed down. And for example, then it's put inside the green bond framework that the issuer or the bank is expecting to use the bond for financing, let's say, energy efficiency or renewable energy projects. But then it goes again into more specific detail, elaboration, and saying they will finance only, let's say, buildings renovation, or they will finance energy efficient appliances. So it's important mostly not to say, okay, this is the list of green projects. The issuer also has to really look at the market, look at the policies, and narrow down the sectors. And the next slide. So at the core of the green bonds is of course the use of proceeds, which means like how will the financing bond finances will be used. And so they use of proceeds, they have to be earmarked only for these green projects that were selected within the green bond framework. And this approach allows for a high degree of transparency, and it also ensures that the bond is really used for green and climate finance. It's important to provide clarity on how are these proceeds used, which is mostly achieved through making green bond framework public and doing regular impact and allocation reporting. And all designated green projects have to have clear environmental or climate benefits, and this has to be checked and assessed by the issuer, either at the time when the project comes to the bank for financing. So the bank's team has to look at the documentation and evidence that the project fits within the set green project criteria, but also sometimes they can do additional examinations, which means they can ask the applicant to submit more extensive technical documentation to have the evidence that the project is green. Also, they can maybe ask for the help of some external companies. Also, what is important that the issuer provides an estimate of what do they expect, which share of proceeds will be used for financing, direct financing, future financing, or it can be also used for refinancing. And they also have to estimate at the start which types of investments and portfolios will be refinanced, and which is the expected look-back period for refinanced eligible green projects. Next, please. When it comes to the management of proceeds, of course, this financing that was obtained has to be treated separately, and the net proceeds of green bonds have to be put on the separate sub account or moved to sub portfolio, or there must be a clear way to track these funds. And the green bonds proceeds have to be attested by the issuer in formal internal processes linked to their lending and investment operations for green projects. Of course, also as long as the green bond is ongoing, the balance of the tracked net proceeds should be adjusted to match allocations to green projects made during the period. And whenever there is still some balance left, the issuers should notify investors on the intended types of temporary or future placements for the proceeds. The proceeds can be managed in two ways. It can be, in case the bank has several bonds issued, they can be managed as a bond by bond approach, or they can be aggregated and managed on a portfolio level. What is also important, is highly recommended by the Green Bond Principle, is to regularly use the help of external auditors or second-party opinion providers that will verify the allocation of funds and also the internal tracking methods. Next. So when it comes to the issuer, it's very important to communicate clearly to the public or to investors the environmental sustainability objectives of the green projects. So which type of projects will be financed, what is the minimum criteria, how green the project will be for each type. Then also the process which will help the issuer or the bank determine how the project fits within the green project categories, which means that they can describe some of the internal procedures and how this will be ensured and checked and assessed. And also the issuer should have some kind of social and environmental safeguarding process internally, or they can establish it, because it's also important, no matter if the project is green, it's important that any other identified social and environmental risks are mitigated. Issuers are also encouraged to position this information in the context of their overarching objectives, like bank strategy, policies, and processes that are related to environmental sustainability, because bank might be doing also some other projects that are related or having some broader strategy moving towards green financing. Then also they should provide information on alignment of these projects with market-based taxonomies, which means also maybe local definitions, related eligibility criteria, or importantly exclusion criteria. And they should disclose any green standards or certifications referenced in project selection. And they should have processes in place, as said, to mitigate the potentially negative social and environmental impacts from these projects. And then next. So yeah, ICMA's Green Bond Principle is recognizing several broad categories of green projects which contribute to environmental objectives, and they are classified as contributing to climate mitigation, adaptation, natural resources conservation, biodiversity conservation, pollution prevention, and control. And green projects, as defined under the Green Bond ICMA's, the standard ICMA's Green Bond Principles, might include assets, investments, but also other supporting expenditures such as R&D, but also, for example, operational expenses that contribute to one of the above objectives. So these don't necessarily have to be like tangible investments. And it's important to note that ICMA allows for quite broad definition of green criteria for each project type, which is not the case for other standards, and that the green project can be adjusted depending on the country, geography, or sector. So it's not necessarily fixed, but still there needs to be some explanation of why certain criteria was selected. Yeah, that's it.
Great, thank you, Tamara. So just to note again, please do, if you have a comment or a question, please do hit the little raise the hand button. Otherwise, we will continue, and we'll have some time in about 15 minutes for question and answer on this part before going to the second party opinion session as well. I'm now going to introduce my colleague Miodrag Grujic, who is a sustainable energy expert mostly, but also on environment. And he will talk about, we've created a tool for banks to help with the screening process of potential investments, as well as to help with the calculations of specifically greenhouse gas emissions reductions for certain types of mitigation projects. So Miodrag, I hand the floor to you.
Hello everyone. My name is Miodrag Grujic. I'm based in Belgrade. Thanks for the opportunity to present you the proposed investment assessment tool we have been working on. In brief, this tool has the goal to help in assessing whether an investment is green and how much green, actually whether it is green enough. This is necessary to know if that investment can be a part of a green bond story, let's say. The tool starts with from a general sheet. It is necessary to fill in the cells that are marked in blue color. Text or numbers are entered into some cells, and in some cells an option selected from a drop-down list should be entered. At the beginning of the tool, there is general data about the applicant or actually company proposing some investment or project. It is the same meaning, investment project. Then please set next slide. Thanks. Then specific information about the investment should be filled in. Since the ICMA green bond principles have been selected for this assignment, the investment category is entered here in accordance with the defined eligible ICMA green project categories using the drop-down list. Since some investment can belong to several categories, several categories can be entered. We offered maybe not more than 3, but it can be changed. But the investment amount should be written below only once, not 3 times. Also, on the right, you can see 1 or more eligible areas are entered below to which the investment belongs, which is a way to explain in more detail the type of investment or subgroup. Next one, please, Seth. Okay. Further financial information about the investment is entered, such as currency, amount, shares of single sources in the financing, anticipated date of start and the end of investment duration. Also, it is necessary to choose the form of financing and the nature of what is being financed from the drop-down list. 2 drop-down lists on the right. The next one. At the end of the general sheet, it is necessary to select the type of investment or sector by clicking on one of the options where the letters are colored in blue. You automatically go to a separate sectoral sheet dedicated to that selected type of investment. Below, there are several questions that will give an answer about the compliance of the investment with the Paris Agreement objectives on climate change, as well as with Armenia's NDCs, actually GHG emission reductions goals. Some of these questions are answered by choosing yes or no options from the drop-down list, and in some of other cells, activities should be described. In the last cell in the general sheet, thanks. In the last cell in the general sheet, which is marked in green color, the final result, yes or no, is entered. Actually, does the investment fulfill the requirements of the green bond principle? This result is the result of an analysis carried out through the sector sheet. Now we can move on the sector sheet. Thanks. As mentioned, next one, please. As mentioned, clicking on one of the types of investment sectors automatically switches to a new sheet dedicated to that type of investment. For example, click on energy efficiency new buildings enables entrance to the sheet buildings new. Now we are on that sector sheet. So now I will show you an example of how one sector sheet works, which checks investment compliance with green bond standards. It is necessary to answer some questions. This is an example of new buildings, and the questions mainly relate to the use and consumption of energy, reduction of GHG emissions, potential for adaptation to climate change, water savings, weight, etc., etc. If the answer to all green questions is yes, the answer to the question of compliance with green bond standards becomes yes automatically. Yellow parts can be useful for better understanding projects or investments. On the next slide, you can see how just one answer no to some of the green questions changes the overall compliance of the investment with the principles of green investment from yes to no. Only one red answer no changes everything. Concerning the next heading, The next one.
Next slide.
Next. I will describe the next two slides relating to the GHG emissions calculation tool. Then I will leave the floor to my colleague Tamara. For most sectors, actually mainly mitigation sectors, a relatively simple model for calculating GHG emissions has been developed so that bank can estimate the impact of investments. The orange cells contain some numerical assumptions which we have proposed, but they may be changed. It is necessary to enter data on the specific investment in blue cells, after which the tool will automatically calculate the other necessary data with its formulas. We have also filled the blue cells here with some imaginary data, but not unreal, in order to show you that the model works. And the next slide, please. Thanks. My last slide, I want to make a few notes about what I have said so far. Specific measurable ICMA indicators were used or are used wherever they exist. For types of investments where ICMA indicators are only generalized, without some concrete thresholds, criteria have been developed in line with ICMA standards. Actually, they are not the opposite of them. Then mandatory criteria mainly relate to GHG emissions, reduction of fossil fuel use, sustainability, impact on climate change, and the environment. The calculation of GHG emissions takes into account the total emission savings over the entire life cycle of the investments. For example, 10, 15, 20, 40 years. Then GHG calculations are developed for renewable sources, buildings, and transport sector. Some criteria are very specific and some of them are only descriptive. When it's possible to make some specific criteria, we did it. There is potential for the development of tools for additional sectors with or without GHG emissions calculations, depending on the bank's policies and intentions. Now, thanks, and I will, Tamara, the floor is yours.
Actually, Tamara, before you get started, let me just say a word about the context of this tool. Because the idea of what we have developed and what we will distribute to everybody is to show what are the decision-making aspects which need to be considered when looking at an investment related to whether it can be included in a green bond. So I'll go back to this one. You can see that the questions that are highlighted in green here, these are the, let's say, critical questions. And if you have a no to any of them, then most likely this investment cannot be included in the green bond. In the yellow ones, they're just useful additional information. And then additionally, we've tried to make it so that such a tool could be distributed to retail bankers or used at the central office to aggregate a number of investments together. So you can link different sheets together or link different files together so that you can follow the entire portfolio of investments. So that's just a little bit more on the context of what we're talking about here. So I will now give the floor back over to Tamara, who will talk about then, because once the green bond is issued, then it needs to be tracked in terms of how the green bond is being utilized. Tamara, please.
Yes, but back to what we have mentioned previously, it's very important for it's the core, it's essential for that the use of proceeds is tracked. And for that purpose, it's mandatory to carry out allocation reporting, which means to report on how are the funds being spent on a yearly basis. And issuers have to keep updated information on their use of proceeds, and that has to be renewed each year until the bond's proceeds are spent. And this annual report has to contain a list of projects to which proceeds have been allocated to. Also a brief description of the projects. There needs to be a breakdown of the amounts allocated for each type of projects, and also there needs to be information on what's expected environmental impact of these projects. And this tool that Miodrag was now presenting to you can also be used to prepare this allocation reporting, because there in this tool, the data on each of the green projects will be saved, and it can be just processed or aggregated and put together for the allocation report. Of course, the amount of detail available for allocation reporting can be, it can differ if there is a large number of underlying projects, or there are some confidentiality requirements. The amount of detail can be lower, and the overall information can be presented in generic terms or basis, which means like just indicating which percentage was allocated for certain project categories. Another important aspect of inbound, except allocation reporting, it needs to be done every year. Next slide, impact report, but absolutely it's recommended. The next slide just maybe it's so for me. And the green bond principle, next. The green bonds principle. Slide.
Is it?
Yeah, the green bonds principle. Yes.
Okay.
Yeah.
Okay.
They absolutely suggest the use of qualitative or even better quantitative indicators, performance metrics, and which have to inform the investors and the public on the impact of green projects. The underlying methodology or assumptions used for quantification of this impact shall also be elaborated, maybe for some types of projects, depending, some can be more complex. The metrics and indicators can be chosen depending, I don't know, what's commonly used on the local market, but there is also this, there are some reports and guidances that can help with issuing with the selection of metrics, and the issuers can decide whether they want to report on the impact at the project or portfolio level, which of course depends on the type and size of the project. If you have many green buildings, of course, maybe it doesn't make sense to report on a project level, whereas if you will have a waste management facility, maybe it makes sense to report on a project level, depends. And it's important, these are some of the core components of green bond principle, but this is very important to inform the investors and market participants, and there are already some templates that they can be found on ICMA's website, and that can be used for impact reporting. But in both allocation and impact reporting, it's important to include the third-party reviewers, or second-party opinion providers, however they're called for this purpose, but because they provide verification. So in the next slide, you can see how this impact reporting template look like.
Tamara,
Yes.
just one question on the former slide. Before, the allocation reporting, that seems to be like a continuation of the green bond principle. It's a necessity to show how basically for the investors how the funds have been used. On the impact reporting, tell me, who is the public of impact reporting? Is it more like a ESG communication from the part of the issuer?
Again,
basically,
the key group that has to be informed on the impact are investors.
Okay.
Because they have to be assured that impact is achieved, and also but of course, it can also be communicated to the public. That was what I was meaning, because the bank might use this information to communicate its overall, as you said, ESG strategy or green financing strategy or whatever.
Right. And is
It
there
can
like
be
a,
used for market? Yeah.
yeah, is there like also like a need to report back to ICMA, to the International Capital Market Association, or not really? I mean, the ICMA is just used as a standard.
We can ask maybe the verifiers, but yeah, I think that it's important to communicate to investors and
Yeah.
probably to the stock exchange. And because I don't know what happens if there were such cases. This is an interesting question, maybe for you or Sustainalytics. What happens if we find out that okay, the bank said they will finance some green projects, and after some time that the expected impact has not been achieved? What happens then? That is what interests me. If you know the answer, feel free.
Well, I think that's a good question to ask to the specialists from Sustainalytics, because they breathe that every day. I know that the stock exchange, for instance, we were working quite closely with the Luxembourg Green Exchange, which is the world largest in that category of things, and they required very often for the issuer to do like an impact reporting back to them. So I think the stock exchange is certainly one of the stakeholders, and the investors, of course, because they need to have that to put on the ESG reporting. I agree.
Yeah, but the verifier is definitely included here.
Yes.
And yeah, it cannot be done just by the bank. The certified verifiers have to be really then here to ensure the accuracy of information.
Absolutely.
So,
Thank you.
Thank you, Yves, for reinforcing what I've said. What should I to say? No, and here is an impact reporting template. Here you can just see. So it can be done on project by project level or portfolio level, and what is the information required. So it's the type of the project, the amount allocated, or for financing, and the share of if the project has many components. Usually the indicators are, for example, annual electricity generation, or renewable energy capacity added, or it can be also tons of CO2 saved. There are several indicators that can be used to elaborate on the impact. Yeah, that's it from my side. Please, Seth and Yves, the floor is yours.
Great, thank you, Tamara. Again, to remind folks, feel free to raise your hands, but we will have some time for questions and answers as well. So Yves and I are going to talk, I will lead, but Yves will, I think, supplement what I will say about aligning the internal processes with the requirements of the external review. So the idea here is that the bank, if it's a bank issuing, or really whatever institution, needs to have the appropriate mechanisms within the organization to make sure that the investments which use the bond proceeds will actually go towards the appropriate projects and not violate the principle of the green bonds. So there are just a few key points here to note. The first is that it should be quite clear within the green bond framework and any prospectus or any other information that's published, what are the eligible types of green bond projects, or what are the eligible sectors that are being focused on, and then within that, what are the specific criteria. So for example, maybe that's the criteria on amount of energy saved per meter squared of building, or something like that. Additionally, we would recommend having a technical appraisal team, especially for larger investments. So for example, if one is investing in, let's say, improvement of an industrial process, $2 or $3 million or something like that, then there needs to be a technical appraisal team for such investments. For smaller investments, so for example, let's say small photovoltaics in houses or something, it should be possible to have a checklist and a reporting form similar to what we have presented today and what we will distribute. And there can be trainings, and also there should always be a central person within the institution who can answer questions from the retail bankers. And in fact, many IFIs provide a kind of a technical assistance for such things for their credit lines. Some of you all will be aware of it, but yeah. Yves, did you want to say something?
Yeah.
Okay, I will keep going. And then additionally, it's important for the system.
No,
to
it's just that some part of the things was a little bit extended, but I think that.
Sorry, maybe my internet has had a problem. I hope not too bad. Let me.
No, yeah, okay.
I'm okay now. Okay.
Yeah, maybe I suggested to take out the screen, the video, so it could help. Sorry.
Yes,
Yeah, good idea. Okay,
as well.
and then the idea is that the green bond issuance process and the framework that's developed should actually reinforce and build off of existing environmental and social safeguarding systems. Then upon issuance, it's important to have a mechanism to keep evidence, to track the projects, ensure that the green bond, the project criteria are embedded within the loan contract. And then while the we don't change the framework as the time goes on necessarily, it is still important to keep track of the green bond standards, whether there might be any changes, and also of course the national regulations, as one does not want to violate any national regulations. In Armenia, this, for example, in energy efficiency in buildings, there are certain regulations on certification of buildings, and so such things need to be, one needs to make sure that the green bond framework is aligned with any national regulations there. Yves, I don't know if you wanted to say anything more about that.
Just maybe one thing on
Yep.
on the evolution of the standards. I mean, you saw that there was an evolution from the climate bond to the ICMA green bond principles, and certainly now I think as you know, there is like a debate raging a little bit around the EU taxonomy, but certainly the EU taxonomy is probably the biggest, widest, and kind of largest attempt, to categorize, all the different sectors, that could fit into either green bond or sustainable bonds, social bonds, etc. And I think that it's important that whilst we have recommended to use the ICMA because it's the most operational one, it's very important that possibly the EU taxonomy is taken into account, and maybe that the evolution, let's say, once they come with like operational, manuals and guidance and everything, possibly the EU green bond standards could become kind of the golden standards, So I think that evolution needs to be followed, and at the moment, I think ICMA is very usable and probably fitted, with the level of developments of Armenian, like a kind of sustainable finance. That's just that I wanted to add.
Thank you.
Yeah.
We have a few minutes. Maybe we can take a short interlude to see if anybody has any questions or comments before we go into the second session, which is on the role of the second party opinion provider.
Yeah, I would be just curious to see, I mean, there are several banks, actually many banks, about where you feel you are. Maybe one thing that would be interesting is to go back to the timetable of the things at the different steps of the thing of the green bond. And just, I would like to ask, maybe some of it's like the very beginning, and to ask to some of the banks, maybe Swiss Bank, can make a statement, is to say where you are basically in the process of defining kind of, you say, sustainable finance, or defining where you are in this process, whether you are like really very much upstream, or you are already like defining the green bond framework. So I'd be just curious to have maybe a few feedback, you know, on your side. I don't know, Ara, if you want to open the fire.
Everyone appears to be shy today.
Yeah.
I hope that doesn't mean they're not listening.
No, hopefully they are. I mean, in general, I mean, certainly the assessment, you know, with James, and you remember, Seth, we had some discussion and several interviews, you know, with stakeholders. I believe that Armenia is very much like at the very beginning of defining, you know, what they want to do and where to orient. And I think there is still some doubts about whether green bond or sustainable finance, you know, would be the right way to raise finance, you know, for projects. And I think that hopefully today we can dispel that. And especially if you look at the statistics of the market and the growth, and also some of the, you know, the interest rate that are, you know, being done by on green bonds, which sometimes could be very advantageous in spite of, you know, the additional cost of all that reporting and SPOs and etc. I think it's a very attractive tools, and certainly when we see the wave of interest for the European Union now from like Eastern European countries and everything, I think slowly but surely the EU taxonomy may become kind of the standard bearer, and the Green Deal will become an attractive, you know, framework for people to align with. And the green bond, you know, allows, you know, you to raise finance to invest in those kind of programs. I don't know, maybe Enrico, do you have any comments, you know, on this, just, you know, looking at what you just heard, and feedback from a practitioner?
Yeah, no, I think that nice meeting everybody. Apologies, I could arrive only like some 10 minutes ago, and I saw already that there was like some question that maybe were better to be addressed by a second party opinion provider. It happens that is me today. I don't have like a lot of feedback on this one, apart from saying, and I think that this is relevant for all the bankers and the people involved during this call, that this is I would say like a accurate picture of like what is happening, but of course there are a lot of market and let's say geography dependent features that players of Sustainalytics are happy to take into consideration. This also goes way beyond the scope of like a second party opinion provider. What we can tell from what I can tell from my side is that we are as flexible as possible in order to support the issuers and the underwriter on second party opinion. So here there is just like a little few little green spots which concerns a second party opinion provider. My job and our job is like to make those like little green spots as smooth as possible, educate you when it is needed, supporting you when it's needed, and of course like the end goal, and here we are all on the same boat, is like pursuing and pushing sustainable investment in Armenia and in all the Caucasus, Georgia and all the Caucasus area. So this is like the first comment, Yves. Then since I arrived late, I prefer maybe like more question to come again to me, so I can like be very accurate and specific to answer them.
Very good. Thank you, Enrico. I don't know, Seth, I've heard a voice. I don't know if there's someone who wants to talk.
It's me. I'm Nona from Ministry of Environment. A little comment.
Very good.
Please go back on the first presentation. I didn't see that industrial processes included in the as a mitigation processes. It was included in our NDC. Was it intended or not in the first slide, in the first presentation?
I will go back to the list of potential investments. I will say we did not create a good tool for industrial processes for estimating emissions. That is because it is a very bespoke activity, and so it's very specific, and so it very much depends on the engineering examination. Certainly pollution control pollution prevention and control is included within the ICMA framework. So that would definitely be applicable for industrial processes, as well as circular economy, which could potentially be also linked to industrial processes. So it's perhaps not listed as such, but certainly it would be applicable in relation to certain investments. Again, to create a tool where we calculate it, the parameters are so different according to the, there's dozens of industries, dozens of processes, hundreds of potential technologies. So it will rely on the specific analysis of the specific industry to make the calculation. Hope that's helpful.
But yeah, just to complement maybe on what you said, Seth, is that I mean, I'm sitting on the board of several industrial companies, and I can tell you that all of them are now rethinking their industrial processes to try to reduce the gases, to reduce the CO2 impact on nitrate impact. And you could find a very large company who are raising huge green bonds. I mean, I'm thinking about the Volkswagen, who has raised like 30 billion, to re-engineer all their process, and also re-engineer themselves to produce green vehicles. But in the making, they are also rethinking all their industrial processes to, of course, reduce actually their footprint. And so that's certainly a reflection of most companies. I'm also on the board of a steel company, listed on NYSE, about 20 billion in assets, and they are spending hundreds of millions literally to redo their industrial processes. So that is certainly part of the ICMA, and that could be eligible for green bonds or sustainability linked bonds, depending on what categories we have. So yeah, I fully agree. This is under pollution prevention.
Thank you very much for clarification.
Other questions or comments, please?
Any other well, if not, maybe Seth, maybe you can undo your presentation, and I can maybe move up my presentation for the workshop number 2, or
Yeah,
do you want to take a pause?
I think I don't think we need a pause, I hope. I hope we can continue. But I think I will have to control it just because of the nature of the technology. So I've brought it up, and let me just share it. Yeah, it should be shared, I hope. Yes, can you see it?
Yeah, then I undo my stuff. I'm sorry. Do you want to, just a minute. So, partager. Oh yeah, so you're sharing the partage. Okay, yeah, please go ahead.
So thanks. So Yves Speckaert is a specialist in green bonds and general green finance. He, as well as our colleague from analytics, Enrico. I'm forgetting your last name, Enrico. I'm sorry. We'll talk about the role of the second-party opinion provider in the issuance or development and issuance of the green bond. So please.
Yeah. So shall I then? You are going to share the screen, or I am going to share the screen?
Just tell me when to change. I think you can see the screen.
No, we cannot see the screen. If you like, I can prompt it. It's exactly the same slides as we shared this week.
Yeah, let me.
Okay.
It's okay. Now it should work. Voila.
Yeah, thank you very much. So yeah, I mean, this is like a specific kind of one segment, basically, of the process of a green bond issuance. Is that you notice that this is a green bond is actually a debt, like a securities like any other. So they follow the same process as you've seen. There is a prospectus drafting. There is, like reaching out to the investor community and then issuing. However, we know that this is slightly more regulated and need to respond to an agenda that actually the use of proceed in the project needs to be green and have an additionality, let's say, in for environmental / social benefits. Because remember that there is like many different type of bonds. We touch about green bonds, but there is also larger categories, such as social bonds, which is like a growing also like things to, for instance, fund education assets, to fund universities, hospitals, etc. And then there is like some kind mixed, like categories like sustainability linked bond or sustainability bonds, which could mix actually both social purposes and also environmental, benefits. So I think this is kind of large. I think we touched upon that. For instance, we're working with on several, sustainable bonds, for instance, in Africa, which bridges both forestry protection or rehabilitation, let's say, of degraded forest, along with like social assets, vocational schools to provide jobs, locally. So that's something that it's a much larger universe. And more and more, you have about 6 or 7 categories of bonds, which could be also investigated, by the Armenian banks. Next slide, please. Yeah. So today, I mean, what we would like to just emphasize is, okay, then why the need for external review, and why are most, green bond issuer, recoursing to second party opinion. To what is the second party opinion, like a process and estimated cost, of course, Enrico might, correct me, and the certification process and reporting, requirements. And then I will let, Sustainalytics, of which we have one of the director here, and to talk much more about the real nitty-gritty of what is, the SPO process requirements, and provide maybe 1 or 2 case study. Next. Yeah, so we have seen already this is that, within the green bond standards, I mean, here, the ICMA, we have the project categories, which are the sectors available, the reporting requirements, and the need for an external review or verification requirements. Why is that? Is that the investor community is a very skeptical and always critical, bunch, and they need to have actually some kind of third-party opinion, very much like, when you have bank accounts or you have a financial account, sorry, you need to have like a big 4 or like a second tier, basically, accountant who verify your accounts. I mean, here it is the process of an external review that basically provides a stamp whether actually the use of proceeds and projects in which you want to invest are eligible for what kind of, environmental benefits, and whether they provide additionality. So that is important because it provides like a seal of approval, basically, that is very much strengthen, basically, the green bond issuance. Next. So from what we have seen in the market, more than 80% of the global market share of all bonds have been issued with an external reviews, of which about 40% have been done by SPO. Again, SPO in principle, could be provided by a big 4 accounting firm, audit firm. It could be done, by very specialized companies such as Sustainalytics or Cicero and some of the others. But the number, speaks by itself, is that most of the people, especially for like first mover, it's very much recommended to have an external review. And so the SPO and verification audits, pre and post issuance verification, are usually done by an external review providers in order to verify and improve the transparency of a green or sustainability, social bonds issuance. External reviewers can also provide support for companies and institutions in issuing green bonds, advice on the eligibility criteria. So I assume there is like a larger pool of services that can be provided, let's say, by Sustainalytics. However, again, I'm very much in favor, being an ex-KPMG, it's important not to be a judged party. So I think in my view, I mean, there is a role for lead manager or lead arranger for the issuer, and then you have the role for the third party reviewer who can provide you with all those that external, like a stamp of approval on the criteria. Next. So basically the SPO, but Enrico will speak much better than that, provides like an independent external reviewer on the green, social, and sustainability bond. And the main role is to confirm the compliance with the use of proceeds standard that is being eligible, in this case, ICMA, the asset identification definition of the eligibility criteria of project, allocation and impact reporting approach, and provide like an assessment of the issuer green bond framework, analyzing the greenness of eligible assets. Now that is an interesting subject, is that, okay, we have heard, we know that in the EU taxonomy or even some third-party reviewers use different shade of greens. You have like pure dark greens, you have like medium green, and then sometimes lighter green. We know that there is concern also about like greenwashing, that some companies may want to actually raise finance under the veneer of greenness, which sometimes finance activities that are not so green. So I think very much the role of a SPO is to provide really like a stamp of approval and a review whether actually the green bond is green and fits with basically the eligibility used in the standard that is being used. Okay, so the external review is done by SPO and then published and publicly available. Oops, a few typo there. Next. Yeah. And I mean, from what we heard, I mean, because we interviewed, sustainability before, Sustainalytics before, and also Cicero, we went to do a few upstream interviews, is that the structuration process for the bond takes about 2 to 3 months. This means after the bank has done their homework, has defined the ESG, has defined a green bond framework. This is what takes the longest, of course, for the institution to prepare themselves for that. But once they are prepared, they know exactly which project they want to do, what portfolio of project they want to do. This could be actually a relatively quick process. So the SPO review can be requested once the framework of the bond is designed. And then the process varies depending on the SPO chosen. Sometimes it could be a bit longer, it could be shorter. So the cost of the SPO, I mean, I'm testing the water here of Enrico. He may tell me that it all depends also on the size of the bond. I mean, I imagine that when Volkswagen did like a 30 billion, like a green bond, the SPO was slightly more costly. But let's say here we're talking about, relatively small green bonds, from 5, 10, 25 million. And so this is usually, within the 40,000 range. But Enrico, maybe you can comment on that, on, how you maybe fit the budget to the size and the ambition, basically, of the green bond.
Of course, I will do. Or do you want me to do it now?
Yeah, maybe just this on
yeah,
this,
no, that's good. So we also make it a bit more dynamic and not just like
thank you.
Even though like Yves, like everything you said is just like very interesting, and I agree with all you said. So the reality has been that Sustainalytics, at least this is our approach. We put not so much emphasis on like the size of the issuances, or the issuance, because despite we recognize that the amount of impact can be different, the amount of gain of a second party opinion could differ if you're speaking about like a ticket of few millions of euros or a ticket of like maybe billions of euros. We work also a lot with governments, so like a lot of times the sovereign green sustainability issuance are in this order of magnitude. The most important let's say, features to the impact, like the price of a second party opinion, is what is included in a second party opinion. So the technical complexity, and this is very easy to understand, is driven in the case of sustainability link opportunities by like the numbers and the nature of the KPIs. If we need to review one KPI on greenhouse gases emission, it would be much easier compared if we need to review like sustainability link bond issuance with like maybe 5-6 KPIs, also on the governance and social and social side of things, as these are like less easy to compare. When it comes to use of proceeds issuances, again, let's just like I want to invite you to think about the difference about like a green bond issuance where the sole use of proceeds categories is renewable energy, or like maybe a framework which contains 10, 11, 12 use of proceeds categories, both green and social, as is very common, for instance, to financial institution. And this is also like one that we did with, I'm sure there are like some people from Ameriabank, and you're very familiar with that very, very carefully drafted framework. So this, the technical complexity, it's like the main driver. Then of course, we totally take into consideration, if we're speaking with the bond issuance or like the loan transaction of a small medium enterprise in the context that maybe will raise a ticket of like few millions of euros, we will try to accommodate what are like the financial let's say the financial needs and desires of the company. The second party opinion is there to push and incentivize the green investment, and not to represent a block. Also, I think that the range is like, it's quite accurate. Actually, it could be like the average probably falls within the lower part of the range that you can see on the screen. But anyway, as I said, like the idea here is like to push for green investment, to favor financial institution and issuers who involve in this process, and so the price should not be an obstacle. This is like I think that I already spoke too much, Yves.
But no, very good, very good. This is perfect, because this makes it more dynamic, as you said. Seth, maybe the next slide, and then one thing which is interesting is that we can see that according to the different standards, the second party opinion can be either mandatory or recommended steps. So for instance, in the case of the EU GB standards, which is kind of almost finished, but in the making, it is mandatory. So they would not actually, accept, a green bond without actually the second party opinion, which solves the whole thing. On the other hand, the CBI, for instance, green bond standards, it's like a recommendation. So you can see that some people don't do actually SPOs, most do, 80%. And basically the SPO enabled to strengthen and reinforce the credibility towards the greenness of the bond and its project. I think it provides also like a seal of approval, for maybe the first time issuer. We are seeing several banks now in Armenia who would like to do green bonds, and I think the SPO strengthen basically their case, especially vis-a-vis the investors or institutional investors, especially if they want to do like a dual listing, maybe on the local Armenian stock exchange, and then also to the Luxembourg Green Exchange, or London, like a sustainable exchange. I think it provides them, more strength, to do the issuance, and comfort, so for the investor community. So without further ado, maybe next. Yeah, I think that we talk about, I think Tamara, talk very nicely and thoroughly on this, on the different reporting requirements, especially the impact reporting. So we can go to the next one. I think that has been covered. And I will let now maybe Enrico to introduce itself, and maybe Sustainalytics as a company. Okay, the floor is yours, Enrico.
Thanks a lot, Yves. So my name is Enrico Testadro, joined Sustainalytics since now over 5 years. I feel already like a dinosaur in the sector, because ESG is like that like rapidly growing industry, which is like changing a lot. And I think that just like 5 years in this moment in the sector is like it feels like alive, because also like the sector 5 years ago was totally different from what it is now. So I won't spend a lot of like my background is not like the interesting stuff, but I have background between business and sustainability. I was working in the sustainability department of Royal Philips in the Netherlands, and then I came to Sustainalytics before as an ESG analyst on the healthcare and pharmaceutical sector. And mostly relevant for what we're discussing today, since the beginning of 2019, I started supporting clients across the EMEA region, especially on like different services which can help them nurture their ESG strategy and raise financing for the sustainability project. So mainly this is like linked with two services, the ESG ratings and the second party opinion. Of course, please feel free to make question anytime. I want this to be dynamic. I know that there was like some question that were like better suited for a second party opinion provider, so sorry if I missed them. Now while I'm speaking is a time of doing that. So if like you recall any point that you would like to deepen, this is the moment. So next slide. You may know like Sustainalytics or like Morningstar Sustainalytics at this point. It may be impressing you, surprise you, but Sustainalytics is a company which was born like over 30 years ago or almost 30 years ago. The Sustainalytics name came after like the asset management branch of like Triodos Bank and the Jansi Research, a Canadian company, merged together in 2008. Michael Jansi was like our founder, and until very recently we were like in on our own, but then we were like let's say we were acquired, we merged with Morningstar, so now we're part of the Morningstar family. I just suspend like these few elements because I think it's really important to look at the trajectory of like Sustainalytics and also other like ESG agency worldwide. And this tells a lot about like the evolution of the ESG industry from being like very little and let's say regional player on solely focused on ESG ratings. We became like a real global company, institutional company, I would say. If you ask to any investors in the world who is like taking care of ESG ratings, they will have 100% at least the rating of Sustainalytics, maybe also some other ratings. And also very important things that maybe in your role is not entirely evident, but Sustainalytics, we are happy, we are like pushing a lot like this definition is a one-stop ESG shop. So whatever financial player you are, whatever like if you're a corporate, if you're an investor, if you're a bank, Sustainalytics as a service for it. I think it's fair to say we're probably like the ESG rating agency with the broadest product portfolio. And this like I don't want to call it dominance, it's not very elegant, but like this let's say prominence, I think it's even more like evident and marked in the corporate solution services. And if we want, we can go to the next slide. Yes, and that's why I'm speaking about like the corporate solution platform. You have like a very very eloquently described in this slide, so you can focus at the like slide below. This is again for the whole Sustainalytics. We have our investor solution services, so making available ESG rating and different kind of analysis, like alignment with the global standard, like product involvement. So what are the controversial activities that a company is involved in? And this is all made available to investors. We have like services for indexes that of course like can use leverage our research in order to establish like a different kind of indexes and investment products. And then last but not the least, the sustainable corporate solution, which is all that array of services for which the end clients are the companies, the issuers, as we like to call them. And for all the banks and financial institutions present on this call, it may be immediately evident for you that this would be then like the common clients. Historically, we have supported like the clients on two main product lines. One is the second party opinion, so the opinion products, as we call them. Whenever a company would like to establish a green social sustainability linked financing, they could get a second party opinion from us. This is also I like also to give like a bit of historical background. This is the first service that established the All Sustainable Corporate Solution Department in Sustainalytics, and then ESG rating licenses. Because yes, it's true that ESG rating were born to serve investors and portfolio approaches of investors, but then like 30 years down the road of the birth of the ESG industry, now they are also the corporate that want to be more proactive in using their ESG ratings. And this is like, I think, probably the most interesting side of the ESG world now, because the company can use ESG ratings for knowledge purposes. Let's say it's a small medium enterprise in Armenia, let's take, they can issue an ESG ratings to understand, okay, what is the Sustainalytics and then investors' perspective on what are the relevant indicator and the relevant materiality ESG issue of a company in the sector. But then for more mature company, let's say the more institutionalized, an ESG ratings could be used like to manage the communication with investor, to establish a sustainability linked financing like a loan. It could be used like for general marketing and communication purposes. But just think if you have investors knows our ratings very well, and think if like a company has already like the Sustainalytics analysis to showcase what they are doing on the ESG criteria. I think that this is just like extremely powerful. Just one very last point, saying that we are also developing further services on the corporate solution side. We have benchmarking services for corporates, so that they want to understand how good they compare, or like they want to further improve on ESG ratings. We have benchmarking services, and last but not the least, a little bit of an elephant in the room, we have also supply chain services through which our clients could understand what's going on in their supply chain. And I know that this is sometimes like an humongous task, but especially for some industry, what is happening outside of the immediate borders of the company, it's even more important. Let's just speak about the classic discussion about scope 1, scope 2, and scope 3 emissions, where the majority of the emissions are scope 3. So Sustainalytics is also a service for that. So I invite you to contact me if you would like to speak about that. But next slide. And let's focus a bit on second party opinion. Second party opinion, I mean, already Yves touched upon like many super interesting points about second party opinions, what they are, what they're needed for. I just maybe like will say a couple of points I deem as relevant on second party opinion from us. First of all, like Sustainalytics is the leading second party opinion provider worldwide. We have issued over like 1,000, and I think that this is like very important to mention, because we are probably the only true global player, and this I think that is really important to be able to nurture and elaborate a very sophisticated internal taxonomy, which takes into consideration regional differences. Where we have seen like the same use of proceeds categories in like different geographies, you're able to understand to put into context regional differences and take those into consideration. Now, on this slide, there is like specifically the structure of our second party opinion on use of proceeds categories. These are comprehend like 3 main sections, which are the first section 1 about the general alignment of the framework that the issuer needs to put in place with the pillars. So the classic, you see them on the right part of the screen in the screenshot of our one of our second party opinion. Use of proceeds, process for project evaluation, management of the proceeds, and reporting. more interesting, the second section. We always want to put into context the issuance with the overall sustainability strategy of the company. Second party opinion, and if you ask me, humble opinion, also ESG ratings or any ESG project shouldn't be intended as a one step in time exercise, because the value of a second party opinion, of an ESG ratings, and on a sustainability project really yields results if it's part of a broader sustainability strategy. And this is right, what we are trying to answer with the second section. We put into context for investors how the issuance, the sustainability issuance sustain the company in achieving their goals and targets. Right. And last but not the least, this is even a point that Yves was commenting when I joined, like 10 to 10 about impact. We want to have a idea about, in the second part opinions, about what is the impact the company aim to achieve. And we do also a little alignment with the sustainability development goals, which are touched by the projects the company intend to invest in. Very important point before the next slide is with the second party opinions, we cannot comment on like the impact that you achieved, because the second party opinion is a forward-looking document. You establish a framework, you get a second party opinion on the framework, and in a way you define the perimeter of sustainable investing for the company in the month and years to come. Then you would issue, you would need to invest, and then you get the impact. And so only then we can again come into play with like another service, which I think that it closed the circle of the second party opinion, which is the impact reporting. Sustainalytics has developed, I would say, rather nice and sophisticated impact reporting services where we can help the company either if they have like already some sort of internal methodology or not. We can support them with a report commenting on the impact which is effectively being achieved. And very important for you guys, the feedback that we receive from investors is that the second party opinions, it's a must. As for the impact reporting, investors are more and more careful about focusing on the impact that effectively, concretely has been achieved. So if you want, I can, if you're interested about this, we can also organize dedicated session. Next slide. Fantastic. This is like another elephant in the room. We have too many transition finance. You may know that, and you may notice also from the kind of request that probably arrived to you, the sectors, the kind of company that always arrive towards you to request about sustainable finance, at least at the very beginning, are the ones which are more prone or to the financing of certain sort of activities. Historically, the first companies approaching sustainability organizations were renewable energy company or utilities financing renewable energy. And this is actually a quote from Michael Yancey, our CEO, in an internal meeting a few years ago. It was saying, like, you probably achieve more impact if you move a company in a brown sector of 1 centimeter that if you move a company or in a green sector 1 kilometer. This is to say that in order to achieve our climate targets and to make our economy more resilient, we need also to tackle companies which are in, I call them brown sectors. I don't know if you like the definition, but let's say in sectors which are associated with a higher level of carbon intensity. And that's where the transition labels becomes important. You already know that the ICMA, the International Capital Market Association, which issued all the green and social bonds, sustainability linked bond, also has some rules and some like advice on climate finance transition. At Sustainalytics, we established a methodology also to issue second party opinion on transition bonds and loans. Remember that transition is a transition category is defined as a category to which some greenhouse gases emission are still associated, but they represent a substantial improvement, and they are suitable for sectors where nowadays it does not exist 100% clean solutions. I can make like dozens of examples, but think about shipping. There is no technology to ship around the world goods and products with no emitting emission. But yes, there are like more efficient vessels which are using less fuels. This would be a transition category. And think about like the production of cement, steel, aluminium. Think about aviation, and so on and so forth. There are many sectors which can be tackled with this methodology. Last point on transition, and this is like specific to Sustainalytics, and you see like the two boxes here. It's extremely important that apart from like the issuance level consideration, so what the company is investing in terms of technology, this is something that we look anyway also for green and social bond issuances. So okay, what are the green or social credentials of the bond? For transition, we want also to do issuer level considerations. This speaks about the transition finance. It's even more important to understand how the company intends to transition in the medium long term away from their high carbon like operations. This is important because otherwise it won't just like be a series of issuance or a serious project if it's not connected with like a path of improvement from the decarbonization perspective. Next slide. We want to also include this is like something that maybe is not extremely relevant at this point. I don't want to bore you. It's about like the process to get a second party opinion. We always have a technical qualification discussion at the very beginning, prior to the engagement. Then we have the process. These are the point 2, 3, and 4 on this slide. So here you need to know that it can last from like 4 to 6 weeks, depending about the complexity of the project. We can, of course, squeeze a bit the timeline. This depends also about how ready you are in squeezing your feedback window, how ready you are in terms of strength or the framework, how solid it is. And especially it's very collaborative. So we can go faster if you run faster with us, but because the process is very iterative. You will have the second party opinion draft in your hands to ask, to put comments, to ask questions, we can have calls to clarify doubts. And after like a few weeks, you will have the final document. I want to conclude with just one.
Enrico,
Yeah,
just one question, because I think this is quite interesting, because maybe most of the banks here are new to this process, beside Ameria Bank, who has done it probably already. Basically, all the phases that are in orange are very interactive phases. Is that correct? I mean, this is where you do the assessment at the level, you assess maybe the ESG policy, whether they have a green bond framework, you review the use of proceed. I mean, could you give us like a sense of the timeline, and who do you involve within, let's say, if there is a bank X basically wants to do this, I mean, who do you typically involve on the part of the client? I mean, who is going to be your counterpart, let's say, in the second party opinion? Yeah.
Very relevant question, and thank you, Ves, also to put into context, like for me. So I would say that 1 to 4 are all very interactive, apart from the final document, which is us delivering the final document. But even there, like we have like interactions to maybe for the publication, for instance. The great majority of the interaction that we have, IDES, are intermediated from a bank. The banks, like, depends on how they are structured. Usually there are like DCM desks, sustainable finance, sustainable market desks. So there is always like this, let's say, 3-party conversation where the underwriter, so the structuring bank is involved, Sustainalytics is involved, and of course the issuer is involved. But since let's say that the technical qualification is performed successfully, the issuer likes the commercial offer of Sustainalytics, and so we go through the project. So phase 2, you are totally right in saying that the process is extremely collaborative. With who we do speak. This we see an array, a very broad array of approaches, depending also the issuer, the nature of the issuer we are speaking to. The majority of the times, The people involved are like mainly, let's say, 3 departments in corporates. We have the sustainability departments and sustainability chief, because they hold the knowledge about the project the company needs to invest in, or the KPIs the company needs to deliver on. There is the treasury, because a lot of time, and the majority of the time, there is a financial transaction. We need to give money to the company. So the treasurer wants to know the financing angle, what they can finance, what they cannot, and then investor relation. This is a bit, I would say, a bit less compared to treasury and ESG sustainability department, but investor relation, this is like something impacting let's say, their conversation with investors, right? So like they want to be kept in the loop. And when I say also the nature of the issuers is because it's very different if you're speaking, for instance, about a private or a public entity. Let's just think that we are speaking with a municipality, with a regional state government, or like maybe with the Ministry of Finance, because we're speaking about a sovereign. There you have usually like a higher number of stakeholders. I think it's very let's say he described quite well what I'm saying when I'm speaking about sovereign issuances. Sustainalytics have done many. We've done the one for Uzbekistan, for Belgium, for Slovenia, and so on and so forth. There you always have like a lot of ministries, and sometimes we have like different calls on different use of proceeds categories, because there is just like a different ministry which is like they're responsible for a certain investment, right? This is not to say that we like a proliferation of contacts. Usually what makes things easy, people, is to have like one point of reference. Then it's like that point of reference that needs to translate the difference of the organization for us. But then we're like pretty adaptive and collaborative. But this, I think, is like the main contacts and people that we usually interact with.
Just one observation on this. I mean, from the contacts we have with the banks, I mean, we saw that many times there is no actually a sustainability department, no ESG department, simply because Armenia may be a little bit, more upstream, let's say, in the process. Do you have also, as part of your services, ways to help them organize more like a ESG, like a response task force, or maybe there is I assume there is a bit of technical assistance so for some of the players that are not yet ready on or not having really like a formed
Yes.
let's say ESG team. Yeah,
Indeed. So the first thing I need to say is that unfortunately, or like maybe luckily, we cannot provide consultancy, because it will be a bit of a conflict of interest to tell you how to build the framework and etc. But like in the technical qualification phase, so the Bordeaux, the column on the left part of the screen, we have an interaction where we tell you if there is any red flag, what we don't consider like eligible or suitable for either a use of proceeds issuance, a linked issuance. So we kind of like give you like the red line where we cannot, where you could not proceed. So, and there is like the client that needs to decide if to engage with Sustainalytics. Also consider the technical feedback we give.
okay.
But this is like sort of like a general principle we share, and the clients needs to be deciding if to work with Sustainalytics or not. But this is like is actually I would say a kind of a substantial help in order to help the client also understand how we frame things, how we think about like issues like in a specific sector. And of course, during the 2, 3, 4 phases, the interaction is like very intense. The company, we share from the very beginning of the process like a written timeline about feedback. We can establish call to discuss. If the company wants to have like understand the reason why certain comments, we jump on a call. So the guidance is always there.
Okay.
I mean, there's a question in the comments about whether we should take into consideration the Russian taxonomy. Let me just answer that. For this particular assignment, we haven't really looked closely at the Russian taxonomy, as we were thinking that ICMA being a fairly dominant and flexible standard was appropriate. But I would be interested to hear from you, Enrico, whether you all have looked at bond issuances based on the Russian taxonomy. I've looked it over. I think it seems like a reasonable taxonomy. I don't know if there's investor appetite based on the taxonomy, but yeah.
Yeah, I mean, to be honest, also that let's be very clear. Probably like given like the socio-political context and what is happening in the world now, I don't think that the investor focus on the taxonomy will be incredibly high at this point. But indeed, Sustainalytics is very open. I just like to be clear, but like then Sustainalytics is very open in considering all sort of taxonomy and principles. I just want to make very clear that. I focus on ICMA principles, maybe EU taxonomy, and so on and so forth, climate bond initiative verification, because these are the one more frequently requested by clients. But then you're totally right in highlighting, and thank you for the question, because it's very relevant to understand that in all parts of the world, and this we know because I told you we're a global player, a lot of countries are doing an effort to establish taxonomy. Colombia has come up with a very sophisticated one. There is one specifically for done by Chinese authorities, South Korea as well. So in all the part of the world, if a company is specific for whatever reason in a certain specific taxonomy, we are happy to consider it. We haven't, I don't know of a project that we have done considering like a Russian taxonomy, to be honest. And also to say, I echo one comment of Yves, which is about how comprehensive and strong is the EU taxonomy. I think that at this point is probably like the biggest effort. I'm not saying the better. This like I let it free to interpretation, but it's for sure like a mastodontic document which could represent a milestone in terms of taxonomy. But door is open for discussion, guys. I hope to also to maybe like being taught something about other taxonomy that I don't know.
Just one last issue. On the final document, let's say, what is the deliverable of a second party opinion? I mean, how big is the document? I mean, is this like a 50-page, 40-page document?
Yeah.
I mean, could you tell us?
To slide back, there was like the initial page. Usually the second part opinions document are like 15 to 20 pages.
Okay.
Also, we don't want, they are like pretty descriptive document, but we don't want to make them longer than that. But they are like very rich in information about the issuers, about like the specific framework, and about like the goals. Also, if you want, you can look for Sustainalytics published projects on Google, and you will get access to our directory of all our publicly available projects. I told you that we have done over 1,000. Not all of them are on the website, because like sometimes they are like bilateral loan agreements. So the second part opinion is just for internal purposes. But there you have like pretty well done filtering options, so you can filter per country, per kind of projects per year. So I invite you to
could you share maybe, Enrico, on the share discussion? Maybe you can give the website, you know, like
I will do immediately.
That would be great. And Seth, maybe the last slide, because I think it shows a little bit, you know, the experience of the Sustainalytics in the region. I believe that you work already in Georgia, and I think the first one in Armenia was done by you as well.
Yeah, correct. So that's what I'm telling you when I say that we have like a really global expertise. We happen to be like the first mover in a lot of markets. Also, like in Eastern Europe, in Hungary, I remember. In Poland, we were not the first one, but I'm not sure if we were the first one, but we have a quite sizable experience. And another relevant comment is that we are a bit of sector agnostic, which doesn't mean that we don't have like specific experience of some sectors. But as you can see here, there are like a sovereign financial institution. There is like a utility. We have been working with the company in a lot of different sectors, and we already have well established relationship with companies in Armenia, in Georgia, less so in Azerbaijan, to be honest, but we are happy to further nurture this. So if you have any question and if you have any doubts, please contact me. Keep question coming. I would be happy to meet you, maybe like traveling there at some point if this world in pandemic will allow so. You're from like a fantastic region of the world, and I would be honored to help pushing sustainability investing in the region with your help.
Thank you very much, Enrico. This was like very useful, and I think provided like a very concrete example about, you know, like a practitioner basically working on ESG and second party opinion. Seth, back to you maybe for final comments. And
Great. Well, I mean, we do have some time, so I would open it up to the floor. Folks have been a little shy up to this point. I would like to actually maybe pose a question to the participants on how far along your ESG processes are, whether or not that is actually a place for maybe initial focus in the green bonds story. And then also just open it up to anybody who might have a question or a comment to share. So, and if there are no volunteers, then we will call this to a close. But
thank you very much. It was very interesting, informative. And the last one will be translated in Armenian, this report, or not?
we are not planning on doing so. For the presentation, we can maybe discuss internally whether we have resources or with the client whether or not we might be able to, as I don't think it would be a tremendous amount of work. At the moment, we are not planning to translate to Armenian.
Thank you.
Any other questions or comments?
yeah, Margarita.
Yes, thank you for the information provided. I just want to say that we have to digest all the provided information and then get back to our staff to update them and then revert back to you. Regarding your question, I would like to say that I wonder if it's possible. In our bank, we have environmental and social regulation policy. It's a handbook, and I just want to understand if it's possible adapt this document to correspondent it to ESG policy that you have requested, or it should be an isolated document. I understand that this should be not a one-time deal. This should become, like you said, a part of strategy of the company, of the bank, etc. I just want to understand if it's possible to adapt this document.
So I think if there's already a regulation and a handbook which has policies by which the bank and the bankers must abide by, then that is essentially the ESG policy. Of course, it would be necessary to look at it in detail, but certainly having appropriate exclusion criteria. What are the key aspects that are considered when looking at investments? And so forth would be along those lines. Enrico probably is even from a green bonds perspective can talk about what level of development it would have to be. But I would guess that if the bank has an internal regulation and a handbook which defines appropriate potential investments and the processes by which those are screened, then I would guess that would be completely sufficient.
Correct. I wouldn't say like I wouldn't add anything anymore. So far, the second party opinion business has not been industry, or like the ESG industry has not been regulated yet. We foresee like that something is going to come. You are all aware about like the great political discussion that there is like about European Union taxonomy, European Union green bond standards, and then of course like there will be maybe some specific regulation happening in Armenia and Georgia. I'm not aware, but anyways, I just like want to renovate the wheel and the of Sustainalytics to discuss about it. I know that this was like a lot of information. So if you have like any specific topic, we can organize another call with me, with the team. Of course, like anyone who can be involved, we would be happy to, let's say, bring you up to speed and further deepen your knowledge about like the topic.
If I may, just one comment said to Margarita's question. Within this same program financed by Green Climate Fund and coordinated by Swiss Bank, in a separate project, we have developed ECG guidelines for banks. So this information is open and available, and if you need it, we can share it with you. It will help actually the bank to design and set up ESG policies and procedures. It's very detailed, so we can share. I think actually it was shared with all the banks, but Margarita, we can share with you once again so that you have kind of a manual on how to do that.
Great, thank you, Lilith. Any other questions or comments? Marianne Abajan, please.
Yeah, hi everyone. I just want to say a huge thank you for this presentation. This is really interesting and very important for us. Just a quick mention, I'm representing Arsham Bank. And of course, after reviewing the presentation, which you will hopefully send us, I think many questions will be arise, and we will come back to you if we may, of course. And as for our ECG guidelines, just please kindly note that we are updating it, our procedures and our ECG policy, and hopefully we will have the finals in near future. Thank you all.
Great, thank you. I would note, so as a part of our assignment, we were meant to provide in-depth technical assistance to 2 institutions. However, I mean, our interest is long-term in promoting sustainable climate finance. And so we will be available to respond to comments and or questions, I think, at least in the near future. And one other thing is we are going to try to organize a workshop, perhaps in person, in Armenia for probably September, where we will we're going to be in touch with some IFIs to talk about their experience in green bonds and how they might be able to cooperate with you all, and also maybe some non-financial sector representatives. So keep a lookout for that. In probably September, we'll be trying to do that. So, any other questions or comments? Great. If not, then I guess we can close now. Thank you all very much for your time and for your attention. Thank you to Enrico for your presentation and for being involved today. And thank you to the rest of the team, Yves, Miodrag, Tamara, and also Lilith and Vanessa for behind the scenes getting everybody here. I wonder, is it okay to take a family photo? If everybody could maybe turn on your camera just for
great idea
for 1 minute.
I see already people like adjusting the hair already. Don't worry, guys. We're all in the same boat.
yeah. Okay, I will see. I wish there was a way of filtering just for the people who have their camera on, but I will 10 more seconds and then I will take a picture. As I said, we will be sharing the presentation. We can also, as well as the Excel tool with everybody. Okay, so 3, 2, 1. Okay, let me just make sure that I can now put it in. Perfect. Okay, great. Thank you all very much. And Yeah, we look forward to continued cooperation and keep a lookout for the materials and for invitation for the next workshop. Thank you all.
Thank you, Seth, for the great job. Thank you, Ara, also for
You're
organizing all. Yeah. Cheers.
Bye-bye.
Cheers, everybody. Take care.
Bye-bye. Cheers. Tu veux voir tout le monde?